So for $2,400 per square foot, this is what developers now are asking you to pay for condo like in example Woodlands, in dairy farms, in places where our parents just bought their first HDB flat for under $200,000. And look, I get it, new launches are exciting. The show flat smells nice, the marble looks gorgeous, the sales gallery has like great aircon, but you strip away like the mood lighting and the fancy brochures, right? The numbers actually tells you a very different story. Today I'm going to break down to you exactly why like paying 2,400 PSF for an OCR projects like condo in 2026 might be one of the most expensive mistakes you can make and what you should be doing instead. So my name is Elson and let's get into the data. So let me show you what an OCR new launch are going for right now in 2026. So Norwood Grand, it Woodlands for $2,067 per PSF. Nara Residences in Dairy Farm, 2,180 PSF. The Ori at Toa Payoh, 2,704 PSF. Magna House at 2,490 PSF. Now, the Ori at Toa Payoh sold at 2,704 PSF. That is like an RCR pricing for an OCR location. Magna House at 2,490 PSF, and that one is a freehold, so I give it to you. But Norwood Grand, $2,067 per square foot. For Woodlands, Nara Residences, 2,180 for Dairy Farm. So here's the thing that most people actually miss. These are not just high prices. These are historical, unprecedented prices for the outside central region. So back in 2026, the average OCR new launch was around $1,200 to $1,300 PSF. By 2020, it actually crept up to about 1,400 to 1,500 PSF. In 2023, we started seeing $1,800 to $2,100 PSF, becoming the new norm lah. But now in 2026, the average OCR new launch is hovering around like 2,200 to 2,400 PSF. So that's roughly like a 70 to 80% increase in just 10 years. Let that sink in. So now, here is where it's actually like gets really interesting. Let's compare what developers are actually like charging for like new launch versus what resale condos are actually transacting for in the same neighborhood. So look at those premiums. In the OCR, right, the gap between the new launch and resale is now at like 40 to 90%. So on a median basis, right, resale condos are about 47% cheaper than the new launches. Crazy, right? I mean not the newly TOP one, I mean the slightly longer one. That is not like a gap, that is like a canyon. Very big. Now, people will say like, well, new launches have like new facilities, new design, and then the ABSD timeline also benefits. And yes, of course, those things have value lah. A reasonable new launch, right? A new launch premium is maybe about 15 to 25%, but a 40 to 90%, that is like, you're paying a massive premium for what? It's like essentially like for a brand new kitchen, a nicer like swimming pool. So here's the kicker. That premium, right, has to be closed by the capital appreciation after you get your keys. So if the resale market does not catch up to your purchase price within like 5 to 7 years, right, then you are sitting on like really an unrealized losses, especially after like factoring the ABSD, the BSD, legal fees, and also the agent commission. So to understand why prices are where they are, you need to actually follow the money back to the land. So when a developer buys land through the government land sales program, the general rule of thumb is this: like if your selling price is like roughly like around like 2 to like 2.2 times like the land cost per square foot per plot ratio, right? Then that's about like 70% for like also for 70% for the construction cost, the financing, the marketing, and then layer on the 20% like profit margin. So the selling price is around like 2,067, gives them a healthy like margin, but it also means that there's also very little room for them to go lower. So this is actually a structural problem. So land costs have actually gone up so much that developers literally cannot sell for less without cutting into their margin. I mean, the average land cost for OCR GLS have already like rose to roughly like 1,100 to 1,200 PSF per plot ratio in 2025, and that bakes in like a $2,200 plus selling price before the first brick is even laid. So when I say when the market is overpriced, right, I don't mean that developers are actually ripping you off, but I mean that the entire cost structure have already shifted so much, right, that the end product may no longer make a financial sense for the buyers. Okay, let's talk about the investor angle, right? So a lot of people are buying these OCR units are actually doing it for like investment. So let's run number. So take a typical 3-bedroom unit at one of these new OCR launches. You are actually looking at about 900 to 1,000 square feet, priced at 2,200 to 2,400 PSF. So that is actually a purchase price of roughly like 2 million to 2.4 million. So with a 75% right LTV loan on a 2 million unit, right, you are actually borrowing $1.5 million. So at today's rate, right, sorry, it's about like 1% as of early 2026 this year, plus a bank spread of like 0.7%, give you an effective rate of around 1.7%. So that's like your monthly mortgage repayment for over like 30 years is approximately like 5,300 to 5,400 per month, around there. What can you rent that unit for like in the OCR? A 3-bedroom condo typically rents for about like $3,200 to $3,800 per month. So let's be generous and say like $3,500. So they give you a gross rental yield for about 2 to 2.5%. But after you factor in like maintenance fees, property taxes, vacancy period, and like agent commission, your net yield right drops to around like maybe 1 to 1.5%, and you're still like having a cash flow negative for about like 2,000 to 2,500 per month. Contrast this right with an OCR resale condo, right? A comparable resale unit might actually cost like 1.2 million to 1.5 million dollars. Same rental income, but your mortgage is significantly lower. Your yield improved to like 3 to 3.5, I think, to 4.5% on the good side Then you might actually break even or be a cash flow positive like for investors. So the math on the OCR like new launches simply actually does not work in 2026 as of now. So what else can 2,400 per square feet buy? This is the part that really blows like people's mind, because at 2,400 PSF you're no longer competing with other like OCR projects. You're in like roughly in the RCR territory already. I mean, RCR prices are also going up So for the same 2,400 PSF that you are actually paying for a leasehold condo in the suburbs, you could be actually looking at a resale unit in the RCR region, like things like Queensway, Red Hill, Tiong Bahru, areas with like significantly better rental demand, walkability, long-term appreciation. Or you can find that older freehold units like in the CCR region for like 1,800 to 2,500 if you are lucky. If you're lucky. Yeah, so we are talking like District 9, District 10 in the Orchard, River Valley, but I doubt those prices, there's not much units there for that. So think about it this way. If you have like $2 million to spend, would you rather like own a 950 square foot leasehold unit in the suburbs, or a slightly older but freehold 850 square foot unit in the city area? So that's a question a lot of people ask. One can depreciate to zero once you know the lease ended, and the other sits on your land that you might own forever with freehold. So the value proposition of like OCR new launches has been completely eroded by the rising prices. So the gap between the OCR new launch and like the RCR resale has already shrunk to almost like the gap, the disparity is actually quite small already. And here is what makes this even more like concerning, is that the supply side is about to get very heavy. That means there are more units coming out. The government has already stated that over 25,000 new private homes through GLS program from 2025 to 2027. So in the first half of 2026 alone, there are about 4,575 like confirmed units plus another 4,610 units on the reserve list already for like private home completion. Private home completion will surge for about 5,200 units in 2025 to roughly 7,000 in 2026, and even more in 2027. And guess where most of this supply is actually going? The OCR. So at 64% of all private homes launched in 2026 will be in the OCR region. Okay, like OCR. Yeah, there is like a lot of competition for your units when it's time to actually sell and resell all these. That's why choosing a correct project is actually very important if you guys are actually targeting new launches. And then there's also like cooling measures risk. So the government has shown time to time again they will definitely intervene when the prices run too hot. We already have the ABSD framework, the TDS limits, and also the SSD. And if OCR prices, right, keep climbing, right, and also do not be surprised, right, if we ever see like, you know, like further tightenings, whether it's like through a higher ABSD rate or tighter loan to value limits or even OCR specific measures. And also finally, there is the affordability ceiling. So at 2,400 PSF, a 3-bedroom OCR unit, right, costs about $2 million or more already nowadays. So the minimum household in Singapore is about 10k to 11k per month. Under the TDSR rules, right, that household can service a mortgage of maybe 1.3 to 1.5 million dollars. So the buyer pool at 2 million plus is actually shrinking. So that limits your exit option down the road means the number of people that can purchase the pool is getting smaller as prices getting more expensive. So now, I always wanted to give you the full picture. So let me address the bull case. Okay, first, land costs are actually structural. Developers literally cannot just build cheaper. As long as the GLS land price, right, stay elevated, right, the selling price have a floor. So, and the government has also no incentive to actually crash out the land values because that will actually hurt their revenue lah. Second, for like own stay buyers, right, who plans to like hold for like 10 to 15 years down the road, the new launch, right, premium may actually wash out over time. So historically, Singapore properties, right, has appreciated at roughly 3 to 5% per year. And if you're not looking to flip in 3 years, I mean nowadays 4 years due to SSD, 4 years, right, the entry price, right, really matter less lah, unless you're an investor looking to flip. So third, interest rates are actually historically low now. So SORA is at 1%, which is unusually favorable to us. Your carrying cost today is actually lower than it would have been at 3 to 4% rate. But remember, rates can actually go up. And fourth, other analyses, right, have already like real estate analysis, all these, right, have already analyzed and forecast a modest 3% price appreciation for 2026. The market is actually not collapsing, but the modest appreciation on an overpriced entry is not the same as getting a good value. OCR new launches at 2,400 PSF are not a scam, okay? But they are also not a very good deal either. So the new launch premium, right, has actually ballooned to 40 to 90% over resale. The rental yield math, right, just does not work for, at least for the investors lah. Homestay is different lah. The price now overlaps with RCR and even with some CCR older resale option projects lah. And the supply pipeline over the next 2 years is going to put pressure on both the rents and also the resale value. So if you are actually buying for your own stay or like you plan to hold for like long term 10 plus years at least, just make sure you are going in with your eyes open, knowing that you are paying a significant premium and factor that into your expectation. If you're an investor, I would seriously consider looking at like resale option in the RCR instead, except for certain new launch project I can recommend. So better location, better yield, and a much more reasonable entry price. If you're actually sitting on the fence, right, the best thing you can do is actually get educated. Compare, run the numbers. Do not let the show flat sell you the dream and the spreadsheet that cannot support. So this is it for today. So if this video actually helped you think more clearly about your next property decision, smash that like button and also like subscribe to this channel. I will put out like data-driven property analysis hopefully every week. Drop a comment below. Do you think that like OCR new launches are overpriced, or is the market just like catching up? And I want to hear your take. And if you want a personalized like analysis for like your own situation, or whether you're upgrading, you're considering whether investing, or just trying to like make sense of this market, right, or just reach out to me lah. I can, the link is actually below in the description. And until next time, this is Elson. Like, stay sharp, stay data driven. I will actually see you in the next video.